So like in the beginning of me learning, TA and whatnot, I would listen to the crap that like, oh, the news doesn't matter and this doesn't matter. Well, it all matters. Uh, Maybe not as much as some people will point out, but it all matters. Everything matters, right? Every human being on this planet matters. Now, like, I mean, does one person have the effect on the, overall outlook on the planet as another? Maybe not, but they all matter, right? This TA is literally the translation of all that. And the big people or things that affect TA are the ones with the most money, right? Like they're the biggest companies or funds or whatever, so on and so forth. Um, that is a good realization to come to, Ben, is that this really translates what's going on in society because for instance, I'm gonna pull up like a blank chart here. Let's go to this one, reset, and then I'm gonna remove drawings. So, like on this blank chart on the daily, like we had our all-time high here, right? Uh, and you'll see people that have been talking about stocks. Oh, Tesla stock dumped and da 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 da. Oh, now this stock is dumping and Carnival and blah blah blah. And they think it's because like in Disney, like all the Disney stocks and Netflix and stuff, they were dumping through here. You know what I mean? And they all think that it's because of decisions that they made. And while yes, those things had an effect, that's not why the asset was dumping. It's really not. You know what I mean? The asset is dumping because all these assets were predetermined to really stop at these points here, 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 and here. And then what really mattered was the lows that brought them up to those highs. So, like, what I mean is like this point here, this all time high, this last one, that was always gonna happen, right? Through reverse trends, essentially, that comes through here. Now, what was really important to watch was the lows that brought that created, rather, that's a better word to put to say. So when this was created and this closed above this high here, this could have continued to run up, but it was always going to pull back. Whenever you break a high or you break a low, you're going to pull back in the opposing direction. That's just inevitable. Now, how soon and how much, that's a different story. That's not a predictable thing. What we got to watch, and this is what I told you yesterday, Ben, is that we need to watch the lows in which created those highs, right? So this comes up, it breaks that high. Now we need to watch this. Okay, well, now it's fighting to close below this. Now, remember what I said yesterday, Ben? Like these little tiny closes, they matter, but I wouldn't put too much stock on them because on crypto, they'll tend to come down, close below it a little bit, and then go the other way. So, but it's something to look at. But then when you see when it's lost completely and it comes down, like, look, it comes right back up to that, and boom, it's gone. Now, this was the really important one, and it just closed right through it right off the rip, you know? And then look, when it comes down, it finishes that move, comes down, tags it, and then it's done, right? So these things were inevitable. Like, and this is something that I'll jump to that I showed you yesterday, Ben, but just so he sees what I'm saying. So that someone read this yet. Yeah, so if I go to Brave New Coin Index, Let me get rid of everything on here. Remove drawings. So if I got a Brave new coin, this is like the oldest Bitcoin chart. And then I go back to, I think it's like March. Let me go to logarithmic scale. I think it's somewhere in, okay, it's back here. There it is. There's, I see that thing. So this right here, this is March 2020. This is the COVID dump. You know what I mean? When the US announced like all these lockdowns and all this stuff, that's when this, all assets, they all did this. You know what I mean? Like Bitcoin and crypto was more dramatic, of course, but all assets did this. They all dumped like this. Now, if we look at this move back here, we see this move up here. Now look, if I put a horizontal line on that right there, this is responding off of something. It's like a, you know, hold right in here on this last accumulation candle before that moved down. That little split range right in there. So that's what it responded to and then rejected from. And then it kept rejecting from just another one fractally, another one. And then when it started to gain those, now let's look over here. Let's come back. So this was, let me find that 2020 March right there. Yeah. Okay. So we can see that this right here was already set in stone when this happened, which was 2017. That was already kind of determined from 2017. And then this move, which is the quote unquote COVID dump, that was kind of already, and I say set in stone softly, but set in stone by this swing high that happened in 2019. June 24th, 2019. These things responded in the way in which they did because of things that happened in the past, not because of news that came out. Nobody knew about COVID or this or that in freaking June 2019. You know what I mean? That was a year before. Like nobody knew about that crap. Now, like I told you yesterday, Ben, those things will definitely add volatility. They will definitely make a move quicker, like more volatile. When those, what they call black swan events, quote unquote, those things will cause these to happen, or the final moments in a move, they will also cause that. But this was obviously, made more dramatic by news, of course. But we can look at this exact same thing, and this is the freaking crazy part. Let me look at
It's a bit like what came
yes.
first, the chicken or the egg, like
Exactly.
related, aren't they?
100%. That's a really good way to put it. What is all this freaking TradingView's made some new changes, and I'm trying to like keep up with them. SPX. All right, so let's look at, we're just going to go to SPX, which is one of the biggest indexes in America, and we're going to put this on a monthly. All right, reset. Okay, and then we're going to look for September 11th, 2001, which is right around here. Okay, let me zoom in a little bit. Should be there. Right there. Okay, I'm going to put a vertical line. Where'd it go? Oh, there it is. Okay, so that's July. Yeah, right there. Okay. So I'm going to just make that kind of, I'm going to mute it a little bit so it's not quite so apparent. I'll make it like a dash line. And I'll just make it a little bit fainter. There we go. So at this point in time, now we're on a monthly chart. I'm just going to go down to a weekly, right? I'm going to go back to that same point in time. Like this is, right there. This is September 4th, exactly 2001. Now I can adjust this line and I can move it to, let's just say I move it right there, which is August 27th. So this is several days, 5-6 days before the Twin Towers. One of the largest assets in America was falling at this point. Like this was, clearly in a bull run. I mean, to say the least, we were in one of the most massive bull runs in American history. You know what I mean? Like it's just been in a perpetual, just massive freaking bull run. We had some pullbacks, sweeps the liquidity, grabs it, and then boom, it's off again to the races. And one day we'll go into why this happens, but these are just bubbles. These are artificial bubbles that our government created, and they're not real. I mean, they are real, but they're not. I know that sounds super convoluted, but they're essentially creating things and demand that aren't there. But like I say, we'll go into that at one point down the road. So at this point, like, look at this move right here. We're moving up, right? Big freaking, we're on a tear. You know what I mean? And then at this point right here, this is, right around when the Twin Towers like crash. Now, there's a lot of things that can be assumed, surmise, however you want to pull it, or put it rather. I'm sorry. But this thing was already on its way down. It was already taking out all these lows in here. You know what I mean? Like it was already reacting to everything that brought it up to that point, and it was losing it. Okay. It seems really easy to blame this on, this happened because of the planes crashing into the World Trade Center. As terrible as that is, and while that did have an impact, and this may have just been this, but it ended up being this dramatic because of that news, because of what happened. But it was always going to happen. It just may have been this. It may have come up here and come down to like here and hit that, and then done this, and then done that, and just kind of done that, and just kind of meandered along like that. But because of what happened, it added volatility to that move. So my point in saying all that is the news matters. Like all these things, that people drone on about online and whatnot, like they do have an effect, but you can see all these things happening before they're going to happen. And if you see some news come out, or you see this or that, like you maybe can expect like a larger move, but it was always going to happen regardless of that news. And it's just like everybody right now trying to say, Disney stock crashed because of, their woke stuff or whatever. Or Netflix crashed because, like they were adding too much woke stuff. Like, yeah, I agree that those things hurt them. Like, that's not why those assets crashed. It was the overall economy, and it was what was being laid out on the chart prior to that happening. You know what I mean? So it's like you said, it's a chicken or the egg, but you can't give too much stock to one or the other. But if you're going to, you really need to give more stock to the charts. That's what's really important. You can see everything there. You may not always be able to detect the volatility, but you're gonna see what's happening.